Microsoft taking it on the chin Thursday despite beating estimates for its fourth quarter earnings. Oppenheimer downgrading the stock to market form for a slowdown in some of its business facing segments, including the cloud. What could this mean for other software and technology stocks? Let's bring in Bill Baruch of Blue Line Capital and Gina Sanchez of Shantico Global to discuss. It's great to see you both. And Gina, I'll start with you. I guess could this portend more bad news for other tech companies that are set to report?
Well, it depends on how much you buy into this downgrade. I think part of Microsoft's issue has been that it has been very strong. Its outlook was already strong going into the pandemic, and the pandemic even boosted demand for its products even more. And so the question that remains is, does that boost mean that they will not get demand later? Has it just pushed forward demand that was already there, or has it created new demand? In our view, we think that the pandemic has actually created new demand. So we don't think that these are decisions that were going to be made next year that were made this year, and suddenly you should expect that earnings should be slowing. So we're going to disagree on this, and we think that the outlook is still strong, but the technicals are probably not. If you look at the price action, it has been very strong, and so seeing a blow off in Microsoft isn't that surprising.
Yeah, Billy, you look at the chart, it's up about 30% so far this year. So just giving back some of its gains today.
Yeah, it's such an unprecedented move. I mean, tech and software, but also risk assets broadly. When something rallies like this, you have to be prepared for it to cool off. Be patient, know you're buying spots. Overall, I think the trend is very well intact. And if you can see the chart that I provided, there's a nice channel, and that support trend line, that's where I'd be looking to be a buyer, 285. Volatility in general here surrounding earnings is nothing new. We saw that at the end of April with a lot of the tech behemoths reporting, or this week and next week. I think the volatility is going to continue. So again, what you want to do is know your spots, 285. That's about another 2% or so from where we are today. And that's where I'd look to be a buyer. I expect the trend to stay intact. But if it starts breaking down through that trend line, you want to be more cautious and manage your risk.
Gina, would you be building a larger or smaller position in technology ahead of next week when we get some of the big names like Facebook and Apple, which are set to report earnings?
Well, look, not all of technology is the same. So I do think you have to make sure you understand what you're buying. In the case of, Facebook or Apple or Microsoft, those are all driven by very different things. So I don't want to look at this. This pandemic has actually reminded us that individual stocks have individual stories. I think that you want to buy into technologies that will help make businesses more resilient, because that is front of mind right now, and that is an investment that will pay itself back on down the road. I don't necessarily put Facebook in that category.
Okay, Gina and Bill, thank you for joining us today.